You often hear me talking about cars, and you hear me talking about how you can get all the money back for every single car you'll buy, drive, and own. You've also heard me talking about debts and paying off debts and building wealth through your own debts and expenses. But the one thing you have not heard me talk much about is you haven't heard me talk about the strangest uses for the infinite banking concept. And that's exactly what I want to hit today. I want to get weird on you. I don't mean like that, well, maybe, but I'm talking about just the strange stuff that people use this concept for. So that's what we're going to dive into. So if we're going to get weird and strange, let's talk about weird and strange things like, well, copy machines. Any of you buying copy machines? How are you buying them? Well, that's a use for the infinite banking concept we can do. How about weddings? I know that's not as weird, but you probably don't think about using your policy to pay for your wedding, do you? You're probably using credit cards or going and taking a loan or being like, hey, mom or mom-in-law, come on, pay for the wedding. But that's another use. What are some other things you can do? How about your taxes? You don't like paying your taxes, do you? Well, what if we could have some interest, compounding interest, pay for those tax bills you have? How about another really weird thing called estate taxes? Now, and there are ways that this concept can make sure that your family doesn't have to pay that estate tax, which can be as much as 40% over those exemption limits. So those are just a couple of the strange things, but things like cell phones, you can pay for those. How about vacations? Yeah, you can pay for your vacations with this. And you know, the strangest use we've had to date. You ever hear of alpacas? You know, I was in California not long ago and we went to this winery and they had these cute little furry long-necked critters and they're called alpacas. And the strangest use for the infinite banking concept that I've personally seen are these furry little critters called alpacas. And if you stay to the end of the video, I'll tell you how somebody used their policy to buy alpacas, get a big tax deduction, and have cute little furry critters in their backyard. But let's dive into this so we can get weird. So before we get into the weird and strange things, let's just dissect what we're going to be talking about, which is called the infinite banking concepts. It's a concept, a process that was pioneered by the late R. Nelson Nash in his book, Becoming Your Own Banker. So what is the infinite banking concept? Well, what it is isn't as important as what it actually does. And here's what it does. It allows you to take back the banking functions in your life. Now, let me put that really simple. Just imagine every single month, you don't even need to imagine, I don't know, there's no imagination here. Just look at your damn checkbook. Every single month you write checks to someone else's bank. You make car payments to a finance company, you make credit card payments to a finance company, line of credit payments, you probably finance some of the furniture. Heck, you finance everything these days, and every one of them comes with a monthly payment, doesn't it? Now that monthly payment includes two things: principal, meaning you're paying the principal back, and interest. Have you ever added up how much interest you're giving away every single month, every single year for the rest of your life? Of course you haven't, because that would just be weird, right? You're sitting down, you're at the bar, you're having a nice dinner and a drink with your friends, and you're like, hey guys, have you ever thought about how much interest you give away to the banks every single month? Is that common talk at the bar? No, you're talking about the football game, you're talking about, you know, the camping trip and the fish that you caught and how big they were, which really they were like this. Kind of like, you know, when you talk about your woo. Anyway, yeah, you elaborate a little bit on that one, but you know, hey, it's okay. It's all right, we all do it. But this is not something you talk about every single day, but it's probably something you should be thinking about every single day. But I got another thing you should be thinking about right now. So if we can just pause and put a pin in that weird stuff and come over here to the important stuff, and that is this important stuff, and that is this little button here. It says subscribe, and there's a little bell up top. Yep, what I need you to do is smash that bell so that you're notified every single time I put new content out. Anyway, let's get back to those alpacas, those furry critters, and weddings. So as of right now, this is June of 2024, and this is when the wedding season really kicks off. A bunch of people are out there, they're just getting ready to seal the deal, to tie the knot, to tie one on, whatever you want to call it. They're gonna get married. And when you get married, some folks actually go out and they do a big to-do about it. You know, they rent out the big place, they invite a couple hundred people, they get the bar, they get the car, they get the... I didn't, I eloped. But anyway, I hear that some of these people actually do some crazy things with weddings. So how much does that cost? I don't even know, but Google does. The average wedding is upward of $30,000. How much did you spend on your wedding? Actually, put it in the comments right now. Let's just kind of do a little competition here and see who could spend the most on the wedding. Anyone spend over 100 grand on their wedding? How about 200? We got any $300,000 weddings? 4, 5? I mean, this stuff gets kind of crazy. So when you think about a wedding, how do you pay for the wedding? Now, I know there are some rules of engagement for weddings, and a lot of those rules come down to the father of the bride and, well, the parents of the groom. I think they all foot the bill, but how do they foot the bill? I bet any money they take loans. I know for a fact banks have wedding loans, but not only that, they use credit cards. How much interest would a bank charge on a loan for a wedding? I'd say in today's economic environment, in today's interest rate environment, it's got to be around 8, maybe 9%. Use your credit card and you don't pay the thing off, it's going to be 20+%. I mean, credit card debt in this country is a straight line up right now. It's out of control. And then it's going to get worse because there's a lot of people getting married because it's wedding season. Actually, hold on a second. This just in from James. We got wedding rates between 10 and 30%. Man, are you batshit crazy? Anyway, probably not. You just want to get married and somebody's got to foot the bill. And yes, it's got to be an open bar. Mom, we are not doing a wedding if it's a cash bar. I'm not having it. No way. You're not even going to be invited. So it's an open bar. And I don't know, I think people can drink quite a bit at an open bar. So somebody's gonna be footing this bill. So let's just talk about the infinite banking concept. Since we wanna take back that banking function in our lives, whether it's our mother and father-in-law or our parents, let's teach them or tell them, hey, I want you to pay for our wedding, because that's just how the rules work, but I want you to get all the money back for the wedding that you're gonna pay for us. Cool, mom and dad? So here's how you do it. You set up a policy, a specially designed and engineered whole life insurance policy. Now this would be a nice little wedding gift too, because now if something should happen to you, you can make the father and mother-in-law the beneficiaries, and you can make your parents the secondary beneficiaries, or maybe split them both in the primary. Hey, that's up for you to decide. So you could pitch it to them and say, hey, listen, we want you to fund this banking system, which is just a specially designed whole life. And we're gonna name you as beneficiary. So if anything happens to me, you get all your money back. But we're not gonna pretend anything happens to me, but you're still gonna get all your money back, because here's how it's going to work. The money you fund the policy with, we're gonna take loans from the policy and we're gonna pay for the wedding. Now, that sounds silly, right? Because they're gonna say, well, why would we take our own money out in loans? Well, here's why. If you understand mathematics, you understand that 6% is more than 5, right? So would you rather earn 6 and pay 5, or would you rather pay 6 and earn 5? Which one would you like? Of course, you want to earn 6 and pay 5. And the reason for that is quite simple, and banks understand this really well. You make a spread. So in this scenario, we're playing the same game. We want to make a spread. We want to make more than what we pay, and if we do, we actually make money. So that's how it's going to work. So we capitalize this policy, we take a loan from the insurance company to pay for the wedding. But then we calculate how much we would have paid to a credit card, a bank, which we already told you, it's 10 to 30%. So figure out where you want it to be, set that interest rate, and then make monthly payments back to the policy. Now, some of you are really good children of your father and mother-in-law or your parents. So you might even say, hey, listen, mom and dad, if you guys are willing to fund up to $30,000 of the wedding and we go 50, here's what we'll do. We'll make monthly payments back to that policy in the form of loan repayments for what we go over. Hey, you can negotiate that, but think of how cool that would be. Now, every dollar that goes back into that policy is repaying the loan to the insurance company. But you see, there's something you missed there, and there's something your in-laws probably missed as well. And that is the fact that none of the money that you took out of the policy in the form of a loan left the policy. That's right, it's all in there earning uninterrupted compounding interest. Every single dollar that was put into that policy and that is in the cash value of that policy is earning interest and dividends. So when you took the loan out to pay for the wedding, whose money did you take? Well, you took the insurance company's money. See, the insurance company promised you a guaranteed interest rate on your cash value and a death benefit if you die. I think you already know this. So when you took the loan, the insurance company kind of just advanced you part of your death benefit. So the death benefit went down by the amount of the loan, but your money stayed in the account earning interest and dividends, and the insurance company interest that they charge on the loan that they gave you is at a lower interest rate than what you're earning. But it even gets better, because the longer this goes on, year after year after year after year, the spread gets bigger. You know why? Math. So that's the great thing. Weird or not weird, it doesn't matter. Using your policy to fund your wedding and applying the infinite banking concept works 100% of the time. So now that I've kind of spent some time explaining the process and why and how it works, I know if you didn't get all that, it's okay. I'm just trying to get you to start thinking about what we're doing here. Let's get even weirder. What about copy machines? Well, many of you probably haven't thought about copy machines, but I have. So I'm going to tell a personal story. You see, here at our offices, we got one of those big fancy-dancy copy machines. You know, the copy machine salesman comes in, and I just want you to picture this. Close your eyes. Comes in his nice, freshly pressed brown wool suit. Okay, he's got his white button-up shirt on, and he's got his brown and yellow striped tie, and he's got his glasses kind of halfway down his nose like this, kind of peering over the glasses as if, you know, hey, these are just my short-term reading glasses. I just want you to know, because if I put them like this, I can't see, but now I can see you, and then when I got to look at your contract, yep, I got you. So comes in like this and starts talking about all the things that fancy copy machine does. That prints this many pages per second. It can staple them, it can fold them, it can curate. I don't even know. They just say a lot of shit and I don't even know what they're saying. And I'm just like, how much is it? And the copy machine says, well, pulls out of his really nice leather satchel a contract and says, right here, you could have this machine today only, and we'll give you a 1-year service contract, all included, and a couple reams of paper. You can have it for a whopping $209 a month. It's a steal. You're never gonna find this kind of a deal anywhere else, but you gotta sign today. So, most people would just sign the contract and be like, well, $200, that's not too bad. I spend more than that at Kinko's and FedEx, so yeah, I guess I'll just do that. But you know, I didn't want to do that. So here's what I said. I said, Mr. Copy Machine Salesman, man, I love your suit, but how much would it be if I just wanted to pay for that copy machine? And that copy machine salesman puts his glasses really far down at the tip of his nose, and he's looking through the contract, and he's like, hang on one sec. He's like, nobody's ever asked me this question. True story. And he's looking through, he's like, you know what? I don't know, I'll have to get back to you about that. And I'm just like, you don't even know what this machine costs? You just know what it costs to lease it? True story. So finally he gets back to me and he's like, it's $8,900 to buy this, as if that's gonna scare me off. And I'm like, I just put on my little calculator hat. I wish I had a hat. You know what the calculator hats look like, the one with a little fan on the front, you know, your CPA used to wear. Anyway, you grab the calculator and you just figure it out, like the $200 and some lease payment times 12. That gives you the annual amount you'd pay to lease the the copy machine. So then what you do is you divide that annual amount you'd pay into the cost of the machine. And then the number I got was the return I'd be giving away, and it was in the double digits in terms of a return, in interest. It's not a return, it's a return because I'm gonna fund it with my policy, but it's an interest rate paying it on the lease. So I'm just like, all right, I wanna buy the machine. He was perplexed. the glasses didn't sit on the end of his nose. He pushed them back up like this, and he's like, wow, all right, well, nobody's ever done this. You know, hey, I don't know what you're thinking, but you know, in 3 years or so, you're gonna need a new machine. And I'm thinking, you know what, Mr. Copy Machine salesman guy, in 3 years, I'm gonna have gotten all the money back that I paid for this copy machine. Plus, I didn't have to pay your leasing company any interest. Plus, I bet you any money there's a spiff that you get for leasing it. And I know you're not gonna get that now, but I'm gonna control every dollar, because every payment that I make on this newly bought copy machine is gonna be paid back to my banking system. That's right, my specially designed whole life. Therefore, it is impossible for me to pay anything for that copy machine, because by me paying it all back, I get all the money back for it. Now, I'm not saying it didn't cost me anything to buy it, because I had to buy it for $8,900, but I got all the money back. And because I got all the money back, I got one other thing. All my money, that $8,900, made interest and dividends the entire time. So I didn't just get all the money back for the copy machine. I got all the money back, plus all the interest I would have paid to the leasing company, plus my money never stopped earning uninterrupted compounding interest. That's kind of a strange way to use your policy, but let me go one step further here. So now we're gonna go really fast, and I'm just gonna rattle out a couple other ones because you kind of see how this works. How about taxes? How many of you make estimated tax payments so that every year, you know, at the end of the year, when you do your taxes, or maybe the next year when you file your extension, when you do your taxes, all the money that you would have to pay in taxes was paid in estimates? Because I know I do. Every quarter I have a schedule and I have to make quarterly payments. So here's what I decided to do. I didn't want the government or the IRS to sit there and hang on to all my money. So what I do is I took those quarterly payments and I just diverted them into my own banking system. Yeah, that specially designed whole life. So every quarter I put the money into the policy, and I just keep doing that. At the end of the year, they figure out how much I owe in taxes. Then I take the money from the policy in the form of a loan, I pay the taxes, and then I continue on with next year's quarterly payments. Going into that policy, then I figure out the taxes and I pay the taxes. You see, every single year I'm pre-funding the policy, and I also figured out how much in premium deposit I'm doing and also how much in repayment I'm doing on the loan, because I'm continually putting money in. You see, when you make payments to the IRS, you are giving up the opportunity cost of that money, because that money's now with the IRS, so they can do something with it. I just choose to make my money stay with me longer. But not only that, even though I'm making my tax payment every single year, my money's still in there earning uninterrupted compounding interest. I did a really good case study on this quite a while ago with this guy named Rick and how he was doing it for taxes on his rental portfolio. So yeah, that's another way it works. How about divorces? Divorces are costly, huh? How do you pay for the attorney and all that stuff in divorces? We did have one scenario, and it was a husband. He was a very wealthy individual, and when the divorce was finalized, he owed monthly payments to his ex-wife. And he's like, I just can't write these checks. I can't do it. I just can't do it. And we basically said to him, we said, you don't have to. You got the money all sitting here. It's not doing anything. It's just sitting in a bank. Let's just change one thing, and that's where the money goes. And then let's devise a system using the infinite banking concept. And we're also, because he needed life insurance, because that was part of the divorce decree. So that was where the infinite banking policy came in. But then we said to him, let's set up a SPIA, a single premium immediate annuity. And we're going to put however much money is necessary into that SPIA so that every single month, the insurance company is going to pay your ex-wife. You never have to write a check or even thinking about it. The insurance company is just going to pay a check to her, and it's going to be less money than you would have to pay her if you did it yourself, because you're earning interest on every single dollar. And in the policy, that money can then be used to work for you a second time, earning even more. You make money twice on the same dollar. But let's wrap this episode up with what I think is one of the coolest and strangest uses, and that is furry, they're not really little, but furry little critters called alpacas. So not long ago, I actually got to pet an alpaca, and I think it might have been one of the first times. I was in California at a winery, and they had like this little petting area for kids. So we go back there, and here they are, alpacas, and they warned me. They said they're really not as nice. They're cute, but they're not super nice. And they like romaine lettuce, so I'm feeding them romaine, and there was this one nasty little critter. Man, every single time I'd put that romaine lettuce next to it, his ears, I think it was probably a girl, her ears would go back, and she was just mean. So I made sure she didn't get any, and I gave it to all to the other guy. But anyway, not here to talk about what mean or nice alpacas are. We're here to talk about how you can get all the money back for all the alpacas you ever buy. Now, why would you want to buy alpacas? Now, maybe you got a petting zoo that you want to have some alpacas around. Maybe you don't want to mow your lawn anymore because they are pretty good lawn maintenance critters. But maybe, just maybe, it's because there's this thing called a 179 deduction. And if you look at the tax code and you consult with your CPA, what you will find, just like a video I did on Instagram, you will find that if you buy an alpaca, you can do a 179 deduction on that alpaca if the alpaca is used for business purposes. Petting zoos are business purposes. I suppose mowing your lawn is a business application, especially, hey, bring the alpaca over to your office every once in a while and have it mow the lawn over there too. These are business uses. I'm sort of joking, but you can consult with your CPA and legal teams to make sure that this is correct. But I will tell you that a 179 deduction definitely works with buying alpacas. So how are you gonna buy those alpacas? Well, you could just take money from your bank and pay for them cash. Or you could change one thing and change where your savings to buy the alpacas goes first. Put them into one of these specially designed policies. Take the loan from the policy and buy the alpaca. Then figure out how much it would have cost for you to make a payment to the bank or to the credit card to buy those alpacas, and then make monthly payments back to your policy. The coolest part about that is every payment you make back to your policy is money that's in your policy the next day for use, meaning you never lose liquidity of the money. And you get to make that spread as well, and you get that tax deduction. Again, consult with your CPA on that. But we've done the research, and those furry little critters, I have no idea why, they certainly qualify as a tax-deductible expense if used for business purposes. So make sure your alpaca collection is used for business purposes and none other. Anyway, folks, I hope you had some fun with these strange and weird uses for the infinite banking concept. But I got one other thing for you. If you liked everything we talked about here, you're gonna wanna check this video out. And this is the brand new remastered 90-minute video. Check it out and let me know what you think. Other than that, we'll see you on the next episode.